Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the week of May 16th through May 20th. And don't sell in May and go away. If you've been around trading for any length of time, you've probably heard this adage, sell in May and go away. And we'll talk about what does that mean, where does it come from, is that a positive thing to do, and I will give you my opinions as to why I don't think just selling in May and we don't want you to go away. Again, we'll look at what does that mean, and then why do I think that is not the way to make money. Again, we'll review some of these things, and I hope you'll stick around. We'll talk about some strategies at the end of the video of how to start recession proofing your portfolio and also inflation proofing your portfolio. And then either at the end of part one or part two tomorrow, I hope to respond directly to some suggestions that have been made in our Discord by some of your fellow BeachBum traders, and we could talk about that further. So again, please stick around to the end of the video, and we'll talk about how to recession-proof your portfolio, inflation-proof your portfolio, and hopefully respond to some of your questions and suggestions. So let's get started. Okay, I've got a couple references, some articles that talk about this adage of sell in May and go away, that I'll review quickly with you, but I'll also put the links in the description box below so you can read them in more detail. The first one is from Seeking Alpha, and again, we'll just take a quick review of these. Here's an old adage, suggests selling stocks ahead of the summer months, and again, here's this author's answers to what does this mean? Is this a good idea? Again, improve annual returns by selling in May and not reinvesting until November. So the go away part is wait until November is what the adage says. And they can talk about, where did this come from? Is some of the historic crashes came in October, and historically stock market returns were lower from May through October compared to November through April. And they've got some statistics. The worst days occurred in October. The average returns from May through October was about 2%. November through May was 7%. You can see this time period. It was, again, that's an average, historical average. And this worked, majority of the time. And you can see this persisted up until 2012, but the period from 2013 to 2020 may have broken that trend. So, and again, one of the main reasons you'll see in these articles is that traditionally, historically, summer tended to be slow. The professional traders just said, well, just sell in May and go away until November. So we'll talk about, again, why I don't think this is a great idea in general. So an alternative is an alternative strategy. They talk about the Halloween indicator. That's buying in October. And then also, again, we're more swing traders. We like to follow the trends, follow rotation, etc. So again, that's one of the reasons I'm saying I don't think it's a general adage to just sell everything in May and go away. Particularly this May, which you'd be selling at a very low point in the market and potentially at a loss. So again, we'll talk about that maybe a little more detail. So again, they're talking about seasonality. It's wise not to rely on just these general trends. And so this author says again, it's worked in the past, but not generally a wise strategy to follow, especially if you have a long-term time horizon. So if you're a buy and hold, long-term investor, have a long-term time horizon. You're missing opportunities and you're missing time in the market. Is May a good month for stocks? Not generally. Um, and again, this May has been tough. I know I'm buy and hold or long-term investors, but actually, there's opportunities there, and you don't want to miss out on those opportunities. Um, and June is not generally a good month. Again, we'll look at that when we get to June. And again, this month or this year may not be historically average. So thank you for Kent Thune and Seeking Alpha for sharing this article. Now we'll also look at the article in Investopedia very quickly and their definitions. So again, very similar in Investopedia, and again, I'll put this link in the description box below. It talks about the historical underperformance from May to October. Um, and again, very similar information. 2%, again, similar data. Um, and again, it talks about the weaker performance from May to October and the same averages, but it did not hold in 2020 and is likely to be outweighed by pressing considerations in other years. So again, this adage doesn't necessarily hold in every year, and this year may be another outlier. And really, it's better to try to capitalize on patterns by rotating into whatever the trend, my opinion is whatever the trend is that where we can make money. And that's our goal here, is to try to find those trends for you, find the themes, the strategies to make money at any time in any market. So they talk about seasonal divergence and how you can take advantage of that. And why not to, is they don't reliably, history doesn't reliably predict the future. Therefore, just because this was worked in the past doesn't mean it's a good idea for the future. And seasonal tendencies tend to conceal fluctuations. So again, there's opportunities for swing trades, day trades, etc., scalp trades, pretty much at any time. And they have a nice graph of the statistics, and you can see more recently returns have been positive in the sell in May return. And alternatives, again, you can rotate into higher risk markets, lower volume. Again, if summer has lower volume, there are still opportunities for that lower volume opportunity. And then buy and hold, they're talking about dollar cost averaging, etc. So again, we hope this all helps. You can review these articles in more detail, and again, we'll talk about our strategy, but in general, we don't think just selling in May, particularly this May, is a great idea, and we don't want you to go away. Don't leave the market. Don't miss out on the opportunities that may be available at any point in time. So I hope that helps. Okay, let's take a real quick look at how the markets ended up on Friday, May 13th. I'm on the home page of FinViz. You can find our affiliate link to FinViz, as always, in the description box below. We can see the markets ended mostly green at the end of Friday. We had this little bounce after a pretty red week. So we can see all the indices ended in positive, but under the covers we can see still a lot of weakness. Still, the vast majority of stocks are below their 50-day moving average and below their 200-day moving average. So we'll take a look at, have we reached a bottom? Can we see a bottom of the pit as we talked about last week, or are we still in free fall? So we'll take a look, but everything was pretty much in the green on Friday. Again, we got this relief rally. This is not atypical of a bear market. Again, I've been saying since the beginning of the year, we're in a bear market, and these types of violent relief rallies to the upside is not atypical of a bear market. So we can see some of the news, it's crazy. Beginning of the end of the correction could be near, so we'll take a look at, do we think that? And after rally after a brutal trading week. So yeah, it could have been brutal, but again, if you're taking advantage of the opportunities that the market gives you, there are always opportunities to make money. So we can see oil was trending up again. It ended up at 110. Natural gas again trended up a bit. It's at 762 right now. Gold trended down, but you can see it bounced up more recently, and we see all the indices were in the green in the future. So in the treasuries, we're above 3, bounced up because that was one of the pressures on the market going down, and then the yields retreated a little bit, and that also helped this rally on Friday. So now let's look in more detail. Okay, if we look at the major indices in FinViz, and I'm looking at a weekly chart for this is for the SPY, the S&P 500. We could see we may have gotten the indication, the sign of what we were looking for a bottom, which is that long tail capitulation. So you're going to hear everyone say, the talking heads, the news commentators say, oh, no one can tell if it's the bottom till after it happens, which, that's true, but this is the type of capitulation that we've been talking about and looking for, which is that long tail to the downside, bounce to the upside. So all I could say, again, this is not financial advice, but that's what we've been looking for, some indication like that that would indicate the potential of that we've hit the bottom of the pit and we're bouncing. So does that mean we're out of the bear market? No, not necessarily, but that may have, that is one side of a potential bottom. So, and we can see that on the weekly chart. Now, to see if we're going to go back to the upside, we need to see it making higher lows, higher highs, right, on any chart. So let's look at the NASDAQ, the Qs. Again, they're all going to look very similar. So they're still way below their averages, still downtrending, but we see that nice long tail, potential capitulation. And again, that's what we want to see for some indication that we're near or at a bottom. So again, we need to see, are we going to go to the upside, or are we going to just, make a low high and then trail down further? And again, all the indications are we definitely have been and are in a bear market, so we need to trade accordingly, right? So if we also look at the Dow, again, it's going to be very similar. So again, not quite as steep, but again, we see that long tail, potential capitulation. We're still well below our averages. And you can see we're making lower lows. You see both of these tails, we're making a lower low, lower highs, etc. So again, we're in a bear market, descending market, but we've seen some level of capitulation at that point. IWM. Again, very similar, very steep, some capitulation. And then if we look at the VIX, which is also a very nice additional indicator of have we seen that capitulation, which would mark a bottom. Now, many people will say they want to see a higher level, a higher spike of volatility to mark the bottom. But we did have a decent spike, and then another indication is we see that steep descent in the VIX. So again, another sign that we may be at the bottom of the pit, or at least we can see the bottom of the pit. So, and where we go from here will depend on events and the market and sentiment, etc. But at least, again, these are all signs, in my humble opinion, that we may be at or near the bottom of the pit. So again, we're still in a bear market, and we need to trade that accordingly. So we're going to see these violent rallies and then violent, drops back down, and we won't know if we're back in an uptrend until we can see lower highs, or higher lows, higher highs. So let's continue. If we take a real quick look at the sectors on the groups tab of FinViz. Again, we have videos that talk about how to use this groups tab in more detail. I'll probably have those links in the description box below again. So hopefully that will help you. We see everything, on Friday everything was green. So that doesn't really tell us a whole lot. Really, you'll see the things that were beat down most were the ones that bounced most on Friday. Again, not terribly atypical. So I don't find that very indicative of what we're going to see going forward. So I think the weekly is more telling. Again, we see consumer defensive. Communication services for the week, again, I think is more of a bounce. It was beaten down severely, same way with tech. So again, if we go back to the month, we see what's been trending is energy, consumer defensive, and utility. And this quarter, since the beginning of the year, those are the three sectors that have been performing: is energy, utilities, consumer defensive. So again, not financial advice, but my recommendation is, you stick with the long-term trends. These areas are positive, which makes sense. We're talking about inflation, we're talking about recession, etc. And these are areas which tend to either be inflation-proof or very defensive in terms of a potential recession. And the areas which did the worst is consumer cyclical or consumer discretionary, communication services, and technology. So in particular, unprofitable stocks are going to perform worse in an inflationary environment. So again, I hope that helps. Okay, let's review some of the economic data we got from last week. And again, you can see the postings in real time in our Discord. We'll point to that in a few minutes, but just some of the highlights, some of my commentary, as again, this caused, some of the volatility in the markets this week. Is one of the things came out on Tuesday. I don't know if you heard this, it wasn't broadly reported, but OPEC warned of potential global supply issues, and Japan started asking people to conserve energy to potential shortages. So that may be one of the indications of why oil started going back up. Then on Wednesday, everybody was waiting for the CPI data. This was, it caused, a lot of people were kind of just waiting, so the markets weren't moving a whole lot prior to this CPI data. And then when it came out, and it was still, showed inflation was still hot, hot. It's not really declining as much as people had hoped, even though they didn't expect a major decline. That everybody was, I think, was kind of hoping it would be not as hot as everyone expected, and the markets reacted negatively to that and declined further. So that caused, a decline into Thursday. Then we got our jobless claims data. Continuing jobless claims was actually a little bit better than forecast, but initial jobless claims was worse. So that means more people are looking for jobs, although a few have found some. And again, the average jobless claims is kind of up a little bit. So again, this says the unemployment rate is headed in the wrong direction. Although that is something that the Fed may see as positive for inflation. And then also the PPI data, another inflation indicator, the core inflation indicators was a little bit better than forecast, but the year on year was a little bit worse. So again, inflation's hot, hot, hot. That was on Thursday. So all indications are we still got a lot of inflation problems. And so again, we'll talk about strategies at the end. How do you further inflation proof your portfolio? We've been talking about the hot inflation since the fall. So this should not be any surprise. And then on Friday we got sentiment data, which was in generally much worse than forecast. So it says the consumer sentiment has turned significantly negative, which again is not terribly surprising given the impacts of inflation. Now we're talking about a potential recession. So again, it's not surprising that the consumer sentiment is starting to be more negative. So now let's look at, if we quickly look at just some of the greens and reds. Again, we can see it's kind of nice in investing.com, and I generally post the links to the daily results, so you can flip over and see the reds and greens, although green tends to just mean that it's up. and not necessarily that's positive for the market. So, core CPI data being up over forecast is actually a negative for the market, even though it's above forecast. So, we see crude oil inventories was up, etc. So, and then we see the core CPI was a little down from the month. Initial jobless claims was much worse than expected, etc. So, and again, sentiment was much worse than expected. So, we hope that helps. And now let's look at the economic data that might impact us on next week. Okay, let's talk about the major economic data that we received last week, and then we'll talk about what's in the upcoming week. And just as a quick reminder, please see the Surf the Market Reports channel in our Discord. You'll find a link to our Discord in the description box below, where we try to post near real-time economic data as it comes out. So you'll see as the economic data is released, typically I go to investing.com and I will copy out the results of that economic data as quickly as I can and post it in this Surf the Markets channel in our Discord, so you can quickly be alerted that it's what the results are and take a look, and then we'll talk about the implications, and we could discuss that in that channel as well. So again, I'd highly recommend you check out the Surf the Markets Report channel, join our Discord, and you'll get near real-time economic data that way. Okay, if we look at the economic calendar, the economic data we expect for next week, we can see, okay, we've got FOMC members, we've got a number of talks now, they're out of their quiet period. And in particular, like Bullard talking on Tuesday, these may cause volatility if these guys come out, say anything unusual. If they start talking about higher than a 0.5 rate hike, it could cause some volatility, some negativity in the market. Although Powell reiterated recently in one of his speeches that they're definitely planning. It sounds like they're definitely planning a 0.5 rate hike for both June and July. So that's what everybody's pretty much counting on. So if these guys start talking more hawkish than even that might cause some concern, some volatility. So just be aware of when these speeches are and protect your portfolios accordingly. We see retail data. Again, this may tell us, what's the state of the economy, how's the consumer, so that would help. Industrial, again, all of this data is going to tell us, how's inflation doing and how close are we to a recession. If economic activity starts to show declines, then we're headed for a faster recession. Building data is the housing market, and again, we've been talking about, we're expecting a rollover in the housing market, and you saw that DRV and the housing market is rolling over. Mortgage rates are increasing significantly. It's going to cause that rollover in the housing market, but some of these things, the building, etc., is going to lag because they started when the housing market was hot. So those things are going to probably lag that rollover in the housing market. And then we get our typical jobless claims data on Thursday, and then not a whole lot other than commodities, etc. So we hope that helps. So hopefully you're prepared for those events during next week. Okay, just a real quick reminder that we're still in the heart of earnings season, and that earnings still matter. Again, as we've talked about last week, pretty much any negative, any reason for the market to punish a stock, it will take it and it will punish that stock, and also those in the similar sector. So it is worthwhile to keep an eye on what's coming up in earnings for this week. Again, you can find the earnings calendar on investing.com. When I get the graphic for Benzica Pro, the graphic view, I will post that in the Discord as well, but please take a spin through the earnings calendar to see what impact it will be on stocks that you own, stocks that you're looking to buy, those in the sectors that you're looking at, etc. So again, it's always worthwhile to keep an eye on earnings. And again, we'll see in Webull that you can get a more near-term view of the earnings calendar as well. So we hope that helps. Okay, if we take a quick look at the additional data we can see in the Markets tab in the online browser version of Webull. And as always, you can find our affiliate link and get free stocks with your copy of Webull in the description box below. We can see, on Friday we had more advances than decliners, a large number in the small range, and then we had a tail of decliners. Net inflow on Friday, so we still saw a decline in the NASDAQ towards the end of the day, which is interesting because tech tried to rally, and then it looks like it failed towards the end of the day, so that's interesting. And then again, we see that rally kind of trailed off even in the NYSE towards the end of the day, so that's kind of interesting. Again, you can see a near-term view of the earnings calendar in the market screen in Webull, times and what's coming up, so that's a nice feature. Not going to spend a lot of time on the best performing from Friday, but if we look at the week, I think that's more telling, more interesting. So we could see consumer defensives, beverages, we see utilities. Again, this is what we saw in the groups tab in FinViz as well. Utilities, consumer defensive. We see real estate, home building is negative. Telecommunications negative, communication negative. Food and drug is mixed. So again, food is pretty defensive. People have to eat. Then utilities is positive, and again food and tobacco is positive. So I think that's a little bit more interesting of a view. We take a real quick look at the ETFs. We'll see the direction of the markets. Again, up Dow, up S&P, down on the VIX, up on the Russell. So again, and up on the Qs, all ups. Industries are all pretty much going to be green on Friday, so that's not terribly interesting. Commodities, beta, livestock, precious metals, gas. Beta, total return. Inflation expectations, that's not surprising. International high yield. So then we'll look at the futures. Right now, as of the filming of this video, Webull is offering 5 free stocks when you open and fund an account. Typically they offer 2 or more free stocks, but sometimes they have special promotions, so please check our link to Webull in the description box below, which you can also find on the About page or the header of our YouTube channel, BeachBum Trading YouTube channel, and or in the link section at the bottom of the About page, and or in the link section under trading platforms on our home page, beachbumtrading.com, bum without the U. And again, if you use our affiliate link to Webull, you can currently get 5 free stocks when you open and fund an account, and you can see those stocks can be up to $3,000 upon funding your account. So we hope that all helps. Okay, if we take a quick look at the Futures tab in FinViz, and again we have another video of how to use this Futures tab in FinViz, so if you're new to our channel, new to our trading game plans, I'd highly recommend you review that video in terms of what are we looking at in this Futures tab. But if we look at the indices in the futures, we can see that capitulation tail, and then we see a bounce. It is still questionable whether it's going to make a higher high, so they all look very similar. We see the capitulation tail. We got a bounce. It did breach the body of that previous red candle, but it did not breach the wicks on those candles. So again, question is, are we going to just test those previous highs, or are we going to breach them? So we're still in a bear market as far as we can tell, and this was a relief rally of a bear market, but we have some indication of capitulation. So that tells us kind of, can we see the bottom of the pit? Where are we relative to the bottom? Also, we see this trail off in the VIX, so the VIX is retracing, reverting to its mean. We're making a nice profit now with our position in SVXY. We're going to trail that down to the 20 level, possibly below the 20 level. We can see that bounce in oil. It looks like it's testing a high. We'll see if it goes and tries to test this 130 high or above. Again, a lot of good opportunities for scalping these energy stocks, oil, natural gas, etc., day trading, etc. Long term, it's hard to see the trend. So again, same thing with natural gas. Now, someone has asked, and we're trying to get to more pairs of ETFs that you can play to do these day trade scalps, etc. But just to mention a couple with oil. There's SCO and UCO to specifically do the crude oil WTI index, and there's also Drip and Gush to do the oil and gas companies, to do natural gas. So you can see natural gas bottom pushed up. Well, we did a scalp with an additional position in cold on this downtrend, made a very nice profit. It's bouncing back up a little bit. If it does this again, we'll do the same thing. We'll get an additional position in cold, which is KOLD, make a profit on a bounce down, and then eventually we have a larger position for an eventual downturn in natural gas. So again, the ETFs to play with natural gas. There's also UNG if you want to play it directly, but there's cold KOLD to play natural gas short, and BOIL to play natural gas long. Again, those are on the companies, not directly on the commodities, so there is some indirect correlation. We see gold and silver kind of trailed off. Again, maybe an opportunity. These are good inflation hedges, store of value. We saw a decline in cryptocurrency. I kind of would expect a flight more into gold and silver, but they were in decline. So again, maybe an opportunity. Platinum, palladium, we're kind of waiting for those. If you look at the longer term charts, they're still a little high, although they look like they bottomed there. But there may be near-term opportunities in those areas. We see, a lot of the other commodities are starting to come down. Again, lumber looks like it's low. There's a couple ETFs you can look at: lumber, cut, and wood, but they're still relatively high. So we're watching that, but haven't jumped on that. And then we saw this, this is a risk-off move in the bonds. When they sold off the stocks, they went and bought bonds, which is irrational given the quantitative tightening. But again, that's what the mutual fund algos do: sell stocks, buy bonds. That's just a straight risk-off move, so it's not expected to hold. But if you're day trading or very short-term trading, you can trade that algorithm. When they risk off, sell stocks, buy bonds. So you can short the stock markets and long the bond markets. And again, the dollar's been very strong, and all the other currencies have been relatively weak. So we hope that all helps. Now let's talk about some strategies we can use to make money in this market, and again, why you don't just want to sell in May and go away. There are opportunities to make money in this market in the coming months, all summer, etc. There's always a way to make money trading in this market, and hopefully we'll give you some strategies to help you do so. Okay, let's talk about very quickly some trends and some strategies, how you can make money in this current bear market, and also going forward, how you can inflation and recession proof your portfolio. So firstly, in this bear market, particularly at this potential bottom, what do? Don't just sell. We have this previous video. I'll put these links in the description box below. Is you buy when there's blood in the streets, and as you have seen our trade alerts, etc., we've been very aggressively buying near this bottom. for a long term, and again to begin inflation and recession proofing our portfolio. So if we quickly look at the Fear and Greed Index, which you can find a link for on our BeachBum Trading homepage, beachbumtrading.com, bum without the U. If you go to the link section, the resources, there's a link to the Fear and Greed Index, so you can quickly reference that. Again, we will see it shows a current fear rating of about 12. I know someone was posting the other day that it hit a low of about 6, so we're in this extreme fear regime. So what does that say? You know, what do you do when others are fearful? You be greedy. So again, we have another video that talks about Warren Buffett's famous quote, be greedy when others are fearful, and you can see we're in an extreme fear indication. So again, that's another sign of that we're near or at the bottom of the pit, the bottom, etc., is this extreme fear. So now's the time to be greedy and begin buying, but buying wisely. So when I say buy wisely, in my opinion, again, not financial advice, but what we would say is, you want to start preparing your portfolio for, we know inflation has been hot, will continue to be hot for some period of time, and you want to make sure your portfolio is inflation proofed. Also, I believe we are in or eventually headed into a recession. Again, my opinion. We'll see what the GDP numbers say. But again, I believe you want to be recession proofing your portfolio. So what does that mean? So let's talk and think about what some of those things mean. Well, if we go into a recession, and we're already seeing some indications of these trends, and high inflation is, what types of products and services will the consumer trade down? Meaning they're going to buy a cheaper version of the same product. So are they going to buy generic store brands, etc.? And are your name brands going to suffer? So again, unless it's a luxury brand, luxuries and the high-end consumer is pretty much immune to this. They have plenty of money, they'll spend more, etc. But your average consumer, etc., is getting hit hard by this inflation, the gas prices, etc., so they need to save money. Well, where are they going to save money? Well, they might not buy the name brand products, but they have to eat, etc., have to have products. So are they going to trade down? And these name brand retailers may take a hit. So watch out for that. Again, are they going to shop discount stores and dollar stores? So, we've been looking at Big Lots and watching that because it seemed to be a reasonable price, one that had an opportunity versus your higher end retail. Now again, your luxuries are going to be more immune, but your upper middle type class retailers are probably going to take a hit, and your discount and off-brand, off-price stores are probably going to benefit from that. Also, are they going to buy local? With the supply chain issues, shipping issues, and inflation, are people going to look to buy produce and other perishables more locally? Actually, we are actively doing that ourselves. We're going to farmers markets, etc. You get better produce, hopefully get a better price, and help support local economy. So are other people going to follow this trend and not buy things that have to be shipped, etc., and are higher priced? The consumer is and they will be, and we can talk about they're reducing their discretionary spending. So what are they going to start cutting out? If they have to pay more for gas and food and rent, what are they going to start cutting out? Well, we see they're probably going to cut out additional streaming services. I mean, do I really need, Netflix and Paramount and Disney and Hulu, etc., or do I want to just pick my favorite ones and cut the rest? So these guys are potentially going to get hit. The ones that are not as popular, not as quality, and there may only be 2 or 3 survivors in that streaming market. Restaurants, people are already saying they're going to cut back on eating out, so your restaurant stocks are going to take a hit. Entertainment, I know everybody rushed out to go to concerts, and they still are, but concerts and movies, etc. But that's going to get cut out when they don't have the money to do that. Same thing with travel. People are already saying they're canceling vacations. They're reducing the number of vacations. I know everybody wanted to get out with the reopening, but now again, inflation pressure is going to put pressure on travel. Are they going to drive less? Um, and go more local type of entertainment. What other type of discretionary spending are they going to cut out? I mean, are people going to really spend $1,000 for an iPhone upgrade when they can't afford their gas or food? Some people may. I believe, unfortunately, and again, this is my opinion, and I won't go into too much detail, but I think people are going to spend, right now, spend every dollar they've got, rack their credit. We've seen the increase in consumer credit. I think they're going to max out their credit cards, and then they're going to crash and burn. And that's very bad. So again, another sign, in my opinion, that we're headed for a recession. The consumers going to spend all their money until they run out and max their credit, and then start defaulting. So be prepared for that, and position your portfolio accordingly. So where's the money flowing? You want to be where the money's flowing and not where it's coming out of. So other ways to inflation-proof and recession-proof your portfolio is thinking about things that are not going to be affected as much. Generally, I don't like the government contractors, the defense contractors in general, but just something to consider is that frequently these government contractors, they have cost plus contracts. And what that means is they get the cost of whatever it is their product or service they're providing plus some percentage. A lot of times it's like cost plus 6%. I've worked for government contractors, so I'm very familiar with this. Again, not one of the reasons I don't necessarily like them, but in this environment, they're pretty inflation-proof, recession-proof, because they have this inflation-proof cost factor that it's not going to impact their margin. They're going to get that cost plus 6%. So that should track inflation. Also, it's not likely the government's going to reduce spending anytime soon, particularly in areas of defense. You see they're providing aid to Ukraine. Well, where does all those products come from eventually? Even the NATO countries that are providing that. And also, are they becoming more defensive? So they're buying more defense products because of the uncertainty with Russia, China, etc. So again, I don't see the government reducing their spending, and so therefore these guys are not really at risk of a recession. So again, I don't generally like this sector, but in this case, in a high inflation, high probability of recession environment, this is an area where you can inflation-proof and recession-proof your portfolio. So again, you'll see we're looking at companies like Kratos, KTOS. We have a position in Erie, which supports some of the helicopters, the Sikorskys, etc. We've also talked about Tate, which I believe supplies products to some of the large government contractors. And we'll see also we've been looking at POW, which is ammunition, POWW. So again, we'll start looking at others in the sector as they become attractive potential setups to also help inflation and recession-proof our portfolios and hopefully help you. So let's talk about this further. Again, we're just starting to begin this process. Although, as you've seen, we've been doing this for a while. We've been buying gold and silver. We've been buying real estate REITs, etc., to again help us in inflation-proof and recession-proof our portfolio. So, what other things can you think of to help inflation and recession-proof your portfolio? Please put your ideas in the comments below, add them in our Discord, our Facebook group. Let's talk about it. What do you think of these ideas? What other ideas do you have? If we work together as a BeachBum trading community, we can all get through this high inflation, get through this recession, make money in the process, and all benefit. So let's work together, and let's all make money together. So I hope this all helps, and let us know what you think. The content of this video was produced by BeachBum Trading. We hope you will choose to also join us in the BeachBum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, BeachBum Trading, bum without the U. On Facebook and in our BeachBum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our BeachBum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new BeachBum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch list, etc. So again, please join us in the new BeachBum Trading Community Discord server. You should be able to find a link in the description box below. You could also find a link in the social media category on our web page, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the BeachBum Trading Community Discord server soon. Wave and say hello. We want to thank all of our fellow BeachBum traders who have also recently posted suggestions. For example, in the suggestion box channel within our Discord, we want to be able to respond appropriately and give it the adequate time and thought and response that we are able. So please keep an eye out for our responses. We hope to be able to get to them in future videos. Maybe we'll have to do a separate session or a separate type of Q&A response video, but we want to devote the appropriate time to be able to respond to each of your suggestions appropriately. So please, we would encourage all of our fellow BeachBum traders, please put your suggestions in the suggestion box channel in our Discord. You can find the links in the description box below. And again, we'll respond appropriately either directly in our Discord, or we might do a full video response to give us the time and be able to go into sufficient detail to respond appropriately to each of your suggestions, all of which we greatly appreciate. So thank you again to everyone who has put a suggestion recently in our suggestion box, and we encourage you all to do so for the benefit of all of your fellow BeachBum traders. So thank you again. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our BeachBum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week. Bye. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left-hand corner. You can watch another video like this by clicking on the box in the lower right-hand corner. And we have a whole playlist of videos like this that you can access via the box in the upper right-hand corner. Our latest video is available in the box in the lower left-hand corner. We hope you like this and have a great day.